Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullah. Thank you all for joining us this afternoon. For those of you who might have come late, my name is Mike Magid Abdulati. I'm the president of American Finance House LARIBA, and it's my pleasure to chair this second session today, inshallah. We have three very distinguished speakers. I'll tell you a little bit about them, and we'll proceed, inshallah. Our first gentleman, immediately to my left, is going to be Mr. Tarek al-Diwany. Mr. al-Diwany runs a consulting and information technology business. He's an independent commentator on Islamic financial affairs. He's experienced in derivatives and capital markets. He graduated from Lancaster University in the United Kingdom in 1985. And Dr. Rahman gave you a little bit about his background of his family. His father is Egyptian, his mother is German. He's married to a Pakistani lady, and he has 3 children, and it's his word, confused children with all the nationalities, because they all live in the UK now. But I'm sure they're fine. Are they boys or girls? Two girls and a boy. Our second speaker, inshallah, is Mr. Rushdi Siddiqi. Mr. Siddiqi is well known. He's a director of the Dow Jones Islamic Index. He's one of the founders of that index. Mr. Siddiqi is a background education. He has an investment banking background as well as commercial banking. He received his bachelor degree from NYU, and he holds a law degree from Albany University. He is married. He has a son and a daughter, Sammy 5 and Sana 2. And he's been with Dow Jones for 4 years, Mr. Siddiqi. And to my right is a gentleman well known in the Southern California area and probably internationally as well, Mr. Saghir Aslam. He is the founder and past president of the Islamic Society of Orange County. He came to the U.S. in 1957 as a teenager, a young man, very young man. He's worked in the retail industry for 11 years as a buyer and managed over $50 million budget. He's traveled throughout the world in his through his experience and his job. His goal was to retire at the age of 36. And in fact, when he reached the age of 36 in 1972, those of us who are quick with math, in 1972 he retired at the age of 36, and he decided that retirement was not all that was cracked up to be. So he got back in business. He started his own business, a home decorating and fabric store in Orange County, South Coast Plaza. With the blessings of Allah and hard work, that business has grown. It had 7 stores throughout California. And in 1995, he retired for the second time. And since that time, since the second retirement, he's been working 12 hours a day, 12 to 14 hours a day, 7 days a week. But this time he's serving the community and serving Allah's cause. He's very active throughout the USA and in Pakistan. As a matter of fact, one of the latest projects he's worked on is he started the Human Development Foundation of North America. Although it was actually started in Pakistan, the goal is to go worldwide with it. And the goal of that foundation is to create a movement to help people throughout the world in health, education, and alleviation of poverty. So we're very distinguished, very pleased to have the distinguished speaker here, and a very busy man for a retired man. Without further ado, if we may start, our first speaker, Mr. Tarek al-Diwany.
Bismillah ar-Rahman ar-Rahim. A'udhu billahi min shaitan ar-rajim. Thank you, Mike, for that introduction. Assalamu alaikum. There is a kind of terrorism which we haven't heard much about in recent months. Its weapon is not the bomb or the bullet. Its weapon is debt. And debt can be a very efficient killer. There are no Hollywood movies to commemorate the suffering of the millions of children who died in last year's debt holocaust. We tell the poor countries of the world that if they achieve growth, then the wealth will trickle down and everyone will be better off. But ours is a very unequal world. And so when the wealth is generated, if it is generated, then most people never see it. We tell the poor countries of the world to borrow and invest, and they will grow out of their problem. But we've been telling them this for 50 years, and the debt just keeps on growing. One day, the developing countries will become transitional countries, and then the debt will grow a little more slowly. Sometimes we tell the developing countries that if they have fewer children...
Can I fix you up just a minute?
Yes.
I want to get this higher.
Oh, okay.
And I don't think the colors are very clear for you to read, is it? No. All right. So
okay.
Why don't you talk? I'll fix it up. Talk.
Okay.
This is a very informal affair, but we want you to get the benefit out of it.
Okay, fine.
Go ahead. Don't worry about it.
Yeah, but I'm attached, I think. I'm attached to something. I can't escape you.
Just speak in general.
Okay. You see, what I'm trying to say is that the advice we're giving is that if they have fewer children, then there'll be more to share for everybody. But the point is that one American consumes as much as 10 people in Africa. And so perhaps we're giving the wrong advice about who should have fewer children. We are living in a world where debt is playing a decisive part in the economic development of most of the world's nations and most of the world's people. And we have to ask, where is this debt coming from? We've had 25 years of conferences on Islamic finance, on Islamic bonds, Islamic equities, Islamic mortgages. But we have not debated properly the one thing that comes before all of those, and that is Islamic money. Because I say that without Islamic money, we cannot have Islamic finance. I want to acknowledge the motivations, the aspirations of those who started the business of Islamic banking, who promoted it, because they had in mind the provision of a solution to some of these problems. But I'm afraid that in some respects, Islamic banking has now become part of the problem. And I want to explain in 15 minutes or so what I mean by that.
One more try.
We need to understand the history of money in order to know why there is a connection between money and debt in our world. And if we go back to the history of England 1,000 years ago, it's very useful for us because there is a continuous record, more or less, or a very largely continuous record of English monetary history. And 1,000 years ago, after the Norman conquest, the unit of currency in England was the pound. And a pound was literally a pound. Yeah, please, don't worry about that.
No,
don't
because people have to see it.
Yeah, but I can talk about it, it's okay.
Go ahead, no.
And a pound was literally a pound in weight of silver. That is what a pound meant, and that is what it was at the time. And a pound was divided into 240 pennies. 240 pennies. Now, from time to time, the kings, they wanted a bit of extra money, and, well, the church prohibited borrowing at usury, and so the kings had to be a little bit innovative. And they had to find ways of sourcing money, but not by borrowing at interest. And one of the techniques they used was a recoinage. They would call in the coins of the realm, take in the silver coins, melt them down, mix them with a bit of cheap metal, copper sometimes, and reissue them. And what you would get back would be a silver coin. It looked the same as the one you gave in, but it wasn't the same. There had been a change in its intrinsic nature. Coin for coin, there was less silver in the new coin. The kings had practiced riba al-fadl on the people, taken 1 unit of silver, given less than 1 unit back, hand to hand. This feature resulted in a coinage which depreciated, but was debased in intrinsic value. And so the people responded by raising their prices, so they would have more coins, but of lower silver content, to re-establish the balance between intrinsic value of goods sold with intrinsic value of coin received. And so very typically there would be periods of large inflation wherever this practice was practiced to a large degree. King Henry VIII and his 6 debasements correlate very well with the Tudor inflation that happened in the 16th century in England. You know, you shouldn't show them the end of the story before I've told the plot.
Nobody can read, I promise you.
If they can't read here, then they're real in trouble.
You can't read what I'm doing. This is magic.
Okay. So we had this inflation, the Tudor inflation, and it was the economic symptom of a monetary illness. When the bankers came along, they took the principle of manipulating the monetary system to an extreme. The early bankers in England in the middle of the 17th century were often goldsmiths. They came across a monetary system in which the king, the state, was the only producer of money. By the middle of the 17th century, 1666 actually, the data is available to us, and it shows that 1 pound in weight of silver was being minted not into 240 coins, but into over 700. You see. But the point is that the name 1 pound still applied to 240 pennies. The name remained, but the intrinsic nature had changed. Now the bankers inherited this system. Jazakallah, thank you very much. The bankers inherited this system. And what they did is to add to the principle. They would take deposits of gold coins from the merchants and issue receipts to them. Take 100 gold coins, issue a receipt saying, I promise to pay you, the merchant, 100 gold coins whenever you come back to my goldsmith shop. The early bankers were safe. And this promise can be enacted by any bearer of the receipt. It was a bearer receipt. The bearer could get the gold coins back. And the banks did everything they could to encourage people not to bring the receipts back. They wanted to encourage them to use the receipts amongst themselves so that one merchant would buy a good from another by passing the receipt, and that merchant then would pass the receipt to another merchant and buy. You see, instead of going to the goldsmith, get the gold coins and go off shopping. No, you don't do that anymore. You use the paper receipt. And trust was an essential element of this development. And so the bankers injected into circulation the phrases of modern banking. As good as money in the bank. Prudent banking. They built big banking halls, very nicely furnished, which the people could have trust in. And when the people had trust, then the bankers changed their business model. They were no longer safe deposits. They became lenders of money. And when the public came to the bank would lend money at interest, but not the gold coins that he kept in his safe, of course. The banker would lend more paper receipts, which he could print at no cost. The bankers had gained, by custom of society, the ability to create money out of nothing. If it is true, then people ask, why did the bankers not just spend that money on their own consumption? And the answer is simple. that if the banker spends the money, the receipt, he loses control of it, and one day it will come back to him for redemption in gold. Gold which never existed in the first place. So instead, he lends it at interest. And one day when the loan is repaid, the receipt is destroyed as easily as it was created, and there is no evidence of what happened. But the interest remains as revenue. This was the new business model of banking. It is still the business model of banking. Banks do not lend you somebody else's money. They create money out of nothing and lend it to you at interest. The Bank of England had the first major monopoly of paper money production in England. It was granted in 1694, and very soon afterwards, the Bank of England went about its business. Yeah, I'm sorry. I'm trying my best here. It's the jet lag problem. To me, I sound very loud. Yeah. Okay. Okay, is that better? Yeah. All right. And so the progression of the monetary system, if we look at it from the point at which the Bank of England started operating, you can see the creation of the national debt coincides very clearly with the creation of the Bank of England. The debt just kept on growing. Today, the money creation process takes a different form, and we just need to have a look at that to see it very clearly. If you imagine that the first bank opens up business and now it puts state money into its reserve, the bank injects his own equity capital and he starts his bank. This state money today is not gold coins anymore. Of course, the state has cottoned on to the idea of producing paper, so paper is state money. And the banks, let's imagine there is one bank in the system, let's simplify. And let us say that there are two customers to this bank. And let us say that person A buys a good from person B for $100 and pays by check. The banker credits, you see, credits person B's account, debits person A's account. Person A is now in debt by 100. Person B has 100 of money, but no state money was transacted between them. Why does the bank do this? For the same reason. In order to charge interest on the money it has created, and at the end of the month it sends an account statement to person B saying you have 100 money in your account. But there's only 10 of reserves to meet that, and the government regulates this reserve ratio, but you can see the money creation process, how it's working. If we add up all of this 100 in person B's account and all of the state money, we have a total of modern money supply. State money plus bank-created money using electronic entries. In the United States today, the dark area is what has been created by the state, by the Federal Reserve on behalf of the state. The grey area is the banking money, and you can see that banks are creating by far the most amount of money in society. Society is paying interest on this light grey area every year. Every year it pays a charge to use money. The situation is no different in Japan, in the United Kingdom, and in Turkey. Following bank deregulation in the 80s, the banks went about their business model of creating money, because the more they create, the more interest they can charge. It's very simple, really. And in the heart of Islam, in Saudi Arabia, we have the same system. There is a problem with this system. Let's imagine we start off with a simple economy, and there is 100 of gold coins in that economy at time zero. And now the first banker comes along and creates $400 of paper receipts and lends them at 30% interest. After 1 year, that debt needs to be repaid. At time one, $520 of debt must be repaid. What is the problem? The problem is that the money supply is only $500. So where does the extra 20 come from? The answer is that the extra 20 can only come from one of two places. Either the state creates more money, or the bankers create more money. But as we have seen, the banks create most of the money in society. And so it is that yesterday's debt can only be repaid by going more into debt today. That is why money supply and debt is growing in every major economy across the world. More worrying still, total debt as a proportion of gross domestic product is growing in every developing economy in the world. Despite decades of hard work and increasing technology, we are more in debt today than we have ever been as a proportion of what we produce. And that is the telling figure. Where is the debt coming from? We know where it's coming from, and we know why. Can there be an Islamic alternative to this? No, I don't think there can be. That first goldsmith banker who produced a receipt promising to pay 100 gold coins on demand when there was no gold in his safe was lying. He could not redeem that receipt. And today it is still true that if everybody went to their bank to get state money out of the banks could not redeem their accounts in state money. I believe we have to address this problem, because if we don't, we will not escape its consequences. It is no use fixing rates of return in advance and saying that we are Islamic bankers, if underneath it all, the rationale is the creation of money out of nothing. Why does society accept it? In 2 minutes. Because businessmen love leverage. They love to borrow at 10%. 5 minutes. They love to borrow at 10% and invest at 30%. Businessmen love it, they always have. They don't want to share 30% profit. Much better to pay the bank 10% and to take the 20% difference for yourself. That is leverage. And what does it mean for society? What it means is that business has the incentive to grow as large as possible. Borrow as many dollars as possible, because on every dollar you are taking 20%. And so we have a world of gigantic businesses, of multinational corporations. We have a world where the small business doesn't exist anymore. The butcher, the baker, the candlestick maker, we have this poem, back in England, they don't exist anymore. They've become employees of a huge supermarket chain, one of 20,000 people. They don't run their own business. They get paid £5 an hour. They don't care so much. These are the qualitative consequences of large-scale leverage. And we've lost the variety. And this is a driving force. Leverage, collateral, and wealth inequality. You know, because the bank wants to secure its interest charge, the best way to do this is to lend to those who are already wealthy. Because if they don't repay the loan, then you take the house, you take the assets, sell them, and regain your principal. But this means that you lend to people who are already wealthy. It is a built-in encouragement to an increase in wealth inequality. Poor people have good ideas, you know. They have good business ideas. But they haven't got collateral. And so the banking system, which is collateral-based, fails a whole group of people, whole nations. Where's the collateral in Tanzania? Uganda. I can list dozens of countries. We all can. Boom and bust. How many times have we heard that money creation, excessive credit creation, is leading to a housing boom? We have it every 15 years in the United Kingdom. It's a feature of many countries. But most of all, I believe we are in a situation where we are forced into economic growth. Because we have to borrow more every year in the long run, because if we don't, we go bankrupt. We have to borrow more to keep the economy going. And that means that we have to do more projects just to keep the economy going. And if we don't borrow more, the economy doesn't keep going. By borrowing more, what does this mean? This means that we do more projects, extract more resources. We are in a situation of forced economic growth. Forced economic growth. We cannot stand still. People say that this is a conspiracy theory that I have propounded to you. But I'm in good company. The founder of the Bank of England, on the day of receiving his charter, stated what the purpose of that charter was. American presidents, many of them, and I choose just 3, have stated the same business model. And they've tried to tell the public They've tried to tell the public in a simple way, but it's a sophisticated thing. And for 300 years, the people have not really understood. But there is a money power, and democracy must rise superior to it. The Prophet ﷺ said that one day every man would practice riba, and if he did not, its dust would touch him. I believe that we are at that day, and the question for the leaders in our business is, do you accept that there is a monetary cause? Do you accept that? And what are you prepared to do about it? Jazakallah.
Thank you very much, Brother Tarek. Our next speaker is Mr. Rushdi Siddiqi. The title of his presentation is Islamic Finance Has Arrived in the U.S., but Is It Growing?
Mr. Chairman, honored speakers, distinguished guests, it's a pleasure and an honor for me to be here again. I was here in 1999, and Dr. Yahya outdoes himself every year with these conferences and topics. All due respect to you, Dr. Yahya. I am not an academic, I am not a scholar, I'm a practitioner, and what I will share with you are some of the issues that I think are of utmost necessity for us as Muslims, or those interested in faith-based concepts from the financial aspect. What we need to do, there has to be what I think and what some of my colleagues have said to me, Islamic financial empowerment. In order for you to get your mortgages and your vehicle leasing and your college education loans, most of those things are not available. We all want those, but we have to demand those. So the basis of my presentation are things along those lines. This is the presentation overview. The most interesting part of this slide is religious sentiment, be it Islamic, Catholic, Christian, Mennonite, what have you, will bring the customer to the door. But if the products are expensive or if the products do not perform, they will not come inside the house. And that's what's happened. And that is what has to be addressed. The most sought after products are, let me go to the next one. Most sought after products here in the United States or in developed countries where Muslims have an established presence are home financing. Some Muslims have used the law of necessity to purchase a riba-based mortgage, hoping that a Sharia-compliant mortgage will be available, and then they can refi in a Sharia-compliant way. There is demand for vehicle and equipment leasing. There is demand for mosque financing. We did Jummah prayers at King Fahd Mosque. Last time I was here, mashallah, $12 million, but most communities would take decades to raise that money to build a mosque like the King Fahd Mosque. So to the bankers such as HSBC and Citi and wherever, this is one of the utmost needs. We need Islamic mosque financing, Islamic center financing. Property insurance. The mosques that exist today use church insurance. Church insurances are a little bit more expensive because churches have ornate glasses and a lot of expensive things internally. A mosque is simple relative to a church, so the premiums are higher. Omar Fisher-Clark had done a lot of wonderful work with Takaful USA. Unfortunately, he's in Saudi right now, working with Bank Al Jazeera. Islamic investing, which I will briefly touch on, but my colleague here, Brother Aslam, will go more into detail. And Islamic charge cards. These things are important because the conventional client, non-Muslim client, has access to all these things. The Sharia-compliant customer has access to very little of these things. Facts about Muslims, everyone's heard the numbers and the figures and all this wonderful stuff. What was interesting for me in this particular slide is in the Financial Times of February 21st, Merrill Lynch is now dedicating a unit for minorities, more specifically Indians, because that's what the demographics have said about the Indian population in America. And the two quotes and the one that is an interest to me is the minority clients may be the key to success for financial firms over the next 50 years. Implication is that affinity market, cluster-based marketing is very, very important. In the UK, the hot new sector, according to the Financial Times Advisor, there are 5,400 millionaires holding liquid assets of $5 billion. Western institutions with Islamic windows want to tap that. Most sought after product, as I said before, was the mortgages. Purchase, refi. Established institutions here, community-based initiatives such as what Dr. Yahya has created, MSI, Samad Group, Toronto Housing Corporation, raising money from the community, circulating it within the community. Wonderful. And the institutions such as UBK, which closed shop last year, HSBC, Capital Guidance, and our colleagues at Freddie Mac have taken an interest into this and now are coming forward with products because there is money to be made. They're not doing it for altruistic reasons. They've got budgets, they've got revenue issues they have to address. This is a viable niche market like the Irish market, like the Chinese market, or the people with pets. I'm sorry. Constraints. I want to concentrate on two things in my presentation: home financing and investing. With respect to home financing, there are a variety of products out there. There's a musharaka, diminishing musharaka, co-op musharaka, murabaha, ijara. What's the difference? What am I going to get? Can you tell what is the best for me? Some of them have not been successful. The UBK program in the UK with the Al-Manzil program had a large down payment, short payback period, and higher basis points to LIBOR, about 150 to 200. So what it was intended for, which was the masses, ended up for the high net worth individuals who may or may not be interested in this. Several Muslims have no credit or bad credit. I was involved with a venture with MEF and First USA trying to do a Muslim affinity card. The project was launched in, I think, 1999 or 2000. And one of the issues that kept coming up is Muslims have either bad credit or no credit. So alternative means had to be looked into for getting a credit profile of the Muslim. Sharia issues. One of the issues that HSBC's come up with, which has been addressed, I think, has been their scholars, Justice Taqi Usmani and his colleagues have signed off on it, that's Sharia compliant, but the local imam at the mosque, who really doesn't understand structure and who wants to err on the side of being conservative, says, I can't issue an opinion. The community knows the imam, trusts the imam, so relies on the opinion of the imam. That has to be addressed. Deductibility, property insurance. The demand is billions, but the supply is in millions. For example, the Islamic finance houses, they raise $5 million, $6 million from the community, but the demand is hundreds of millions, if not billions. So what happens is there's this long list of people wanting a mortgage, vehicle financing, equipment financing, and may have to wait years and years and years. An issue that has to be addressed. Staffing, supply, training. Behind the screens, you need call centers. These are infrastructure issues that have to be addressed. And institutions such as HSBC Amana are basically establishing the model, the infrastructure model for this. Customer service support, these type of issues. Islamic funds. This is an area that I come from. Islamic funds, basically in the U.S. you've got 3 or 4 funds, but they have a measly $64 million of assets under management. Brown Brothers Harriman, as of Friday, will no longer be involved in Islamic funds. They've terminated their lease. Reason being, they couldn't gather enough assets, meaning Muslims at whatever level, retail, institutional, high worth, basically were not forthcoming with the money. Number of reasons for that. The concept of the preconditions to investing was basically pinpointed to 1987 with the fatwa of the 3 sheikhs, and as a result, in the early 1990s, you had established Western institutions opening up Islamic windows, and offering funds geared towards high net worth and institutions. Key issue there is, yes, Western institutions bring credibility and legitimacy additional to this niche market, but are they mandate driven? Meaning if the mandate is taken away, they're no longer interested, or is there real commitment to addressing the needs? It's a function of time. At Dow Jones, this is one of the issues that Brother Mahmoud brought up, is the screening and some of the biases. I acknowledge that, but the scholar said, here are the screens, apply this to the universe, and here's the end result, universe. The end result has a regional bias, a concentration bias, turnover bias, backtesting, but it's Sharia compliant according to what the scholars have said. There's nothing much more we can do. However, more work needs to be done. These screens are an interim solution and not a final solution. This is pretty interesting from the point of view of the largest Islamic funds. There are 6 to 9 million Muslims here, well-to-do, probably have higher per capita income than the Muslims in almost all Muslim countries. Yet, the two funds, the Amana Income Fund and Growth Fund, have a combined assets under management of about $45 million. Here, the largest funds, the largest Islamic managers, you see no Islamic bank involved, and the largest Islamic sponsors, NCB, SEDCO. What's interesting about this particular slide is you saw the number of funds increasing and then significantly decreasing from early 2000 when you had the NASDAQ going to 5,000 something to now. You have more funds, but however, there's fewer assets under management. There's been a decrease of 34%. And that has to do with redemptions and money being parked in short-term safe vehicles and asset deflation. What's interesting about this, and it should be 2001, the bottom figure, is the type of products that are being launched. I think the banks and sponsors are listening to what the retail is saying. In 2000, 23 funds launched, 8 were global funds, 5 of them were capital protected or balanced. In 2001, 11 funds launched. You see 1 global equity and 5 capital protected and balanced. This is interesting for the analysis that was done by Faleka of what are the bottom lines for a successful fund, a faith-based fund, Islamic, Catholic, Christian. The 15 largest funds, these were the common denominators, and the 15 smallest funds, this was the common denominator. You have to have low minimums. For example, the Al-Ahli Global Trading Fund has got a $2,000 minimum and assets under management of $500 million. They have very little upfront loads, and they have very small management fees, and you see the end result is assets under management. When you have a high minimum, high front load, high management fees, a 4.4 million average size for AUM versus $108 million AUM. This was a sort of digression, but I thought this was very interesting. This survey was done by the Mennonite organization about faith and Wall Street, where they intersect. Mr. Chairman, how much time do I have? I have 1 more minute. Well, you can have my slides later. Bottom line is, why haven't expectations been built, have not been met? Distribution issues, no load, marketing. It's a concentration of pure equity. There's no Islamic bond, Islamic money market, Islamic CDs yet to have a diversified portfolio. Islamic funds, are they ahead of their time? It seems like there's a lack of interest. Why? Are there opportunities in the Muslim countries? 56 Muslim countries, 30 have stock exchanges, 10 allow foreign direct foreign portfolio investment. Saudi is a market that you have to go through a fund to invest for non-GCC investors, and therefore the conclusion is very few opportunities there because there's been a massive amount of capital flight from the Muslim countries. What can be done, I think, do not wait for the Islamic banks to set up shop here. The Islamic finance houses have done a wonderful job, but capital constraints have been one of the biggest obstacles. The Muslim banks who have established branch offices here offer affinity-based Muslim conventional banking or community banking, LCs, travelers checks, remittances, no Islamic community banking. These are the things that have to be done. Otherwise, what the end result is, be marginalized. In 1996, I heard the figure of $150 billion and growing 15% per annum. We sponsored a conference last week in Dubai, and the same speaker said $150 billion and growing at 15% per annum. What are the implications? If it was $150 billion in 1996, growing at 15% per annum, it should be over $1 trillion. It's not. And are there really 1.2 billion customers? I think sub-Saharan Muslims have more pressing need of meeting their daily survival than interest in Islamic finance. So bottom line, Islamic financial empowerment, more needs to be done. Assalamu alaikum.
Thank you very much, Brother Rushdi. Our next speaker is Brother Aslam. The title of his presentation is Investing in the Stock Market, Market Gyration and the Potential for the Future.
Assalamu alaikum wa rahmatullahi wa barakatuh. Bismillahir Rahmanir Rahim. Rabbi shrah li sadri wa yassir li amri. Wahlul 'uqdatam min lisani wa yafqahu qawli. Respected brothers, distinguished guests, chairman, once again, Assalamu alaikum wa rahmatullahi wa barakatuh. Mike, thank you very much for a wonderful introduction. He was really hesitant to reveal my age. He was saying, I came here as a young boy, I came here as a teenager. Let me tell you, brothers and sisters, I'm a 66-year young man, emphasis on the young, and going on 67. First of all, I would like to thank Allah subhanahu wa ta'ala, then thank Dr. Yahya Abdul Rahman and the board of LARIBA to provide me this opportunity to share some of this information with you. I had prepared this for about half hour, and the respected chairman just told me I have 15 minutes, and my style is, inshallah, I'll try to get it done with less than 15, so he doesn't have to pass the slips to me. Patience. Patience and perseverance should pay off in the long run. They have in the past, although that does not guarantee future result. It's important that all investors remember the lessons that we have learned over the last 100 years, not during the last 3 to 5 years. That was different and unusual. One key lesson learned is that the bear market do not last forever. According to Standard & Poor's, the average bear market since World War II saw a decline of 28.5% and lasted 13 months, with the exception of the real bear market that we had this time. This was different, this was unique, this was unbelievable, and many of us sitting here and many out there still see the blood coming out. However, I believe personally that we are to the bottom of the market and the beginning of the bull market. Perseverance requires a bit more work than patience alone, as research and vigilance are needed to make sure stock selection meets your objectives. Each one of us have different objectives depending on our age, on our need, our wants, our priorities, our goals, our objectives. But one thing we must do, we should make plans where we want to be 5 years from now, 10 years from now, and another 20 years from now. I had my plan, as I said, when I left Pakistan, I said I want to retire at the age of 36. Periodically, shocking events rock the securities market. And we're just going to run some of these slides very, very quickly because we do not have time to go through in detail. If you are interested and you need some of this information, you can send a self-addressed envelope, prepaid, $50, stamps on it, to LARIBA office. I'm sure Dr. Yahya, LARIBA board will make some arrangements to send it to you.
It's online.
Good.
No need for the self-stamped envelope.
Okay. So there are several of these slides you can go through quickly, but we are not going to have time to go through them, so I will not. We will only touch. There were several of the shocking events, as you can see: Operation Desert Storm, assassination of President Kennedy, November 22nd, 1963, Cuban Missile Crisis, October 1962, Pearl Harbor, December 7, 1941, World War I, 1914. So we will not go into detail on those, but let's take a look at the recent one. Stocks hit bottom after September 11. However, hope reigns, and the record already shows performance of all three major U.S. stock indexes have been stellar since September 11th. I think you can see it here. Now the slide that you're going to see here, one more. Slide that you're going to see here, the one back one. Dow, it said close at 10,572. It's not there anyway. It closed at 10,403.94, still considerably up. The NASDAQ was up. So is the 500. Perhaps the best gauge of the health of the overall market was up almost 20%. So we'd only talk about two things. Number one, patience. Number two, you've got to be in the market to win. You cannot win if you're not in the market. Missing out on the beginning of a bull market can be costly. When you consider the big gains in the Standard & Poor's 500 index in the early stages of the bull market. Now, quickly, this chart shows 8 bear markets. And I have been through, lived through, survived through all 8 of them. My very first investment was in 1961 when I bought, as a poor student, measly 5 shares of IBM. And I still hold them. And today, you can guess how much they're worth. Over $100,000. So patience does pay off, even with all the meltdowns. If you look at the first bear market of 1970, look at 3 months later, the market was up 17.1%. 6 months later, 22.8%. And look what happened a year later, 43.7%. Even with a higher increase, look at 1982. See, there are a lot of people have said in different conversations, get out of the market. You shouldn't be in the market. This is the time to be in the market. Let me just, if you cannot take the roller coasters, if you don't have the stomach to take the ups and downs, there is an alternative. And the alternative is right here, LARIBA. You can get a steady return year after year. So talk to LARIBA people. Let me just tell you, if you do invest in the stock market, you can make substantial amount of money, but you must have the right stomach and you must have the patience. Matter of fact, we have an annual conference. And at this year's conference, our theme is going to be how each one of our children can retire multi-millionaire. And I'm not talking about the rich people. I'm not talking about the well-to-do people. I am talking about the average people with discipline, with proper investment. Thank you very much. May Allah bless you all. Please, if I've said anything wrong, anything to hurt you, forgive me. Otherwise, pray for my family. Pray for the Muslim Ummah at large. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Okay, any questions, please? Raise your hand and we'll dispatch the microphone with Mr. Imran.
Tarek, you gave a very good history with regards to money and its past and its present and future. I'm curious to know, do you know which major economies in the world currently have their money actually backed by a commodity that has intrinsic value?
Not to my knowledge. I don't think there is any country which operates a commodity backing standard now. There are countries which have dollarized their economy. There are countries which have currency boards where they hold typically $1 for every unit of their own state money, M0, that the central bank issues. And there are floating pegs and these kind of things which go on, which don't actually require a 100% backing in any kind of asset, financial or otherwise. So the answer is no, not at the moment. But inshallah, if plans in Malaysia proceed, we may see something, I don't know what, along that line. But it's too early to say in that case. Just an idea there at the moment, I think.
As a follow-up question to your presentation, Mr. Tarek, play out the scenario. Where are we going to end up with these charts and this growth that you've been demonstrating? Are we looking at a doomsday scenario here, or is there something else happening? Or
this system cannot last forever because it is based, I believe, on haram, on riba. And I believe that it will either destroy itself, let's say, in some undesirable way, maybe environmental, maybe economic, maybe political, I don't know. Or the alternative is that we can have a reasoned debate and go back to the beginning and say we are causing increasing distress, not just in the developing world, but in our own backyard. Wealth inequality and debt is increasing in the developed countries as well as the developing countries. And if we have that reasoned debate, it will be better for everybody, But we cannot have that debate whilst we are being fed a kind of intellectual propaganda. In the academic sphere, in the British Museum in England, the History of Money exhibition is sponsored by HSBC Bank, for heaven's sake. You look at the Federal Reserve, the Bank of England, they're sponsoring research on the monetary system. I mean, what sort of research are they going to sponsor? Research which says that you guys should close down? Of course not. So I think we should have a reasoned debate, and if we don't, then the natural course of exponential growth in it, not just financial terms, but in resource extraction, in the impoverishment of nations is going to continue, and the problems will just get worse. There will be a cyclical nature to it, of course, and every down will be greeted with hoorays by the orthodox economists, but the ups will always be higher than the downs in the long run.
This is for Tarek again. I mean, you basically, I think you burst an economic bubble, but the question I have is, unless you're ready to provide concrete solutions, bursting bubbles are just a waste of people's time, because people want answers, and the Quran is a book of clarity, not a book of ambiguity. So if you're going to make an analysis, economic analysis, and you're going to look at various alternative ways so people can live a very concrete life, so they can have food, clothing, shelter, etc., and you're saying that all these systems are based on riba, then and you're trying to Quranically, you're going to speak from the point of Sharia. Quran's a book of clarity, and not a book of ambiguity.
You can have the question, please.
Okay. The question is, you burst the bubble, so what do you got to offer?
Yeah. Okay. In a limited time available, what we must first do is understand that we have a problem. And when we know we have a problem, then we know that we have to find a solution. And I can talk at length about what the solutions might be, but there's no point doing that if people don't think they have a problem. What I've done today is to show that we have a problem, and if you want to invite me back one day, then maybe I'll talk about a solution. But you can find it.
Thank you. I'd like to pick up a point made by Mr. Saghir Aslam, and then to refer it back to something that Professor Siddiqi said this morning. You're saying, sir, that one must have patience to be in the stock market, to be able to take the ups and downs. Now, some people can't afford to take those downs because perhaps they're not as wealthy as other people. and everyone in this room perhaps has a portion of their wealth which they can't afford to take any loss on. So that it's inappropriate for them to go into a roller coaster investment, which is what the stock market could be. Then I think about, I'm thinking this through, so bear with me, and I'm thinking back to what Professor Siddiqi said about how under a riba system you have financial instability, that it promotes instability. And I'm just wondering how far that's true, because there's a lot of discussion at the moment in accounting circles about marking to market your balance sheet. The notion that on a real-time basis, banks should mark to market. So if I lend Mike Abdelati $100, and during the course of the year I realize that he's not going to be able to pay it back, then I mark my balance sheet to market immediately. And what bankers say is that's going to cause tremendous instability in the banking market, and you'll have a lot less confidence. So, but if you have a riba system, it would seem that you're actually gaining, to some extent, more stability, because you know what is going to be repaid and when it's going to be repaid. If everybody put all their money in the stock market, or if we all went into private equity, then there would be perhaps less certainty of return. And my final point, I'm sorry I'm going on, is to link this into the desires of individual investors who need certainty of return. And if I'm remembering correctly, Muhammad Abdu is alleged to have made some statement about how it was allowed to invest in treasury bills or post office certificates in Egypt at the beginning of the last century, because at least it assured people some sort of return, and that was good for them. It gave them some return on their savings.
Thank you very much. It's a very lengthy question, but let me try to answer my part. I personally do not believe you have to be rich to invest in the stock market. However, you should only put the money in the market that you do not need to feed your family. Once you have analyzed your situation, you have done your homework, you have done your planning, then you invest accordingly, according to what your stomach can take. Now, many a times I have said in our annual meetings that minimum investment period, as far as I'm concerned, is 20 years. If you want to be a short-term investor, it's 10 years. Less than that, as I said earlier, Dr. Yahya raising his hand, so either he's going to answer or he wants me to stop. So anyway, continue to invest on a long-term basis. You get the right company. You look at the history. They have all paid off. And if you're interested, as I said earlier, in a steady, regular growth, you can take something like a LARIBA. I've been involved with the LARIBA since its inception. And mashallah, every year it has grown steadily. And on the other hand, I personally, when I invested in the stock market in 1961, I was a very poor student, making $1.25 an hour. Takes a lot of money to accumulate to and invest. And over the years, it has paid off. But you only do the money that you don't need to feed your family. Hope that answers it. Thank you.
Thank you. Dr. Ahmad?
In response to Mr. Cunningham's concern, what the LARIBA bankers are lacking today is the honest-to-goodness LARIBA financial consultant. And that's the person who is qualified to develop a balanced portfolio that will meet the needs of the average Muslim family, which will include things like a fixed income substitute. And we're trying to develop that. You'll be hearing news if somebody would listen to me somewhere in McLean, Virginia. And we're going to have a stock market component, and we're going to have a money market component. And this way you can take the wrinkles out of the system. The problem with the riba system balancing things out has been tried before by long-term capital, by Enron, and now we hear by GE. And it goes well for some time, But then when you have an abrupt step change, it doesn't work. And when it doesn't work, then you have a problem. And the whole idea is you have to have a balanced portfolio, and we should never go out and preach to the average Muslim family or the retired Muslim person to go out and put your money in the stock market because this is the only alternative available. I think it is a crime if we ever do that, and punishable by American law, let alone from a higher authority. Thank you very much.
Thank you very much. We have room for one more question, please, and we'll need to proceed.
Concerning stock market and the real estate, the question would be, if the stock market went down 50% last year and the real estate went up, then my question is, where do you want to invest? Invest in real estate.
Thank you. Thank you. All right, shall we proceed? Well, okay, last question, and then we'll proceed, please.
This is my first time at a LARIBA conference. I want to tell you how happy I am to be here, to hear from all of you. I'll throw this question up to the whole panel. Each of you has outlined issues that concern our community in terms of economics, but we know that money doesn't move in a vacuum. Would you care to discuss political and social aspects of these same topics and what our community can do about them in those areas to affect the economics?
The issue that I raised was Islamic financial empowerment. If you look at the U.S. political system and the vested interest groups and how the whole system works, it's not above board. But in order for you to change the system, you got to get into the system. You have to be able to understand the games that the politicians play. We have a voting bloc, and that's recognized. We need to be able to show the politicians, local, state, federal level, that we can replenish their war chests. And I think in being able to do that, our voice has greater weight at the state capitals and Washington, D.C.
Thank you. Okay, if we can proceed, please. We just want to move the program along and try to stay on schedule. I thank the panel very much for their wonderful presentations, and I will ask the next panel to come up, please. Thank you.